Property taxes are one of the largest ongoing costs of owning a home in Texas. Because the state does not collect an income tax, it shifts a massive financial burden directly onto local property assessments. For most homeowners, this creates an annual dilemma. The final tax bill arrives in October. It feels entirely out of your control, and the sheer size of the number leads straight to decision paralysis. The core mistake is treating that bill as a single, spontaneous event. If you wait until October to call the tax office to complain about your property's value, you are calling the wrong place at the wrong time. The system operates on two separate tracks. In spring, the appraisal district determines your property's value. In fall, local units adopt the tax rate. These tracks merge in October. The spring value, multiplied by the fall rate, equals your final tax bill. We are going to map out the return on investment of protesting your appraisal, define how exemptions and caps function as financial levers, and figure out whether you should fight this battle yourself or hire a professional. By the time the October bill arrives, the math is already locked in. Trying to work backward is a guaranteed losing strategy. You have to intercept the process months earlier, during the spring valuation phase. This table breaks down three numbers: market, appraised, and taxable value. Market value is the raw estimate of what your home would sell for, fluctuating wildly. Skipping to taxable value, the Homestead exemption removes a mandatory flat amount, currently $140,000, straight from your baseline. The trade-off is you have to meet specific conditions. You must own the home, use it as your principal residence, and keep the district informed. You cannot apply this exemption to a rental or investment property. Back in the middle column is the 10% appraisal cap. Once you qualify, this cap restricts how fast your appraised baseline can grow year over year, regardless of how fast market prices explode. The catch is that the cap does not freeze your underlying market value estimate. It simply limits the math used for billing. Your base appraisal can still compound upward by 10% every single year until it catches up to the raw market data. There is a major loophole. If you build a new pool or room, that value gets added entirely outside the 10% cap calculation. Routine maintenance and minor repairs do not trigger this, but major additions do. You may also receive a notice regarding a 5-year Homestead review. This is an internal district audit to maintain their records. It does not mean every legitimate homeowner is automatically forced to submit a brand new application from scratch. Exemptions instantly lower your taxable baseline, and caps slow down the year-over-year bleeding. But neither of these mechanisms stops the underlying market value from creeping upward over time. To actively pull down that underlying market value, your primary offensive weapon is filing a formal protest with the Appraisal Review Board in the spring. If you choose a do-it-yourself protest, your inputs require localized evidence. You need to gather time-stamped photos of property defects, document structural problems, and pull targeted sales comparables from your immediate neighborhood. Doing this yields a highly tailored, factual presentation. You know your home better than a database does. The trade-off is the steep cost in your personal time, the legwork of gathering data, and your comfort level navigating a formal negotiation. The alternative is hiring a bulk filing property tax consultant, which flips the equation. The input requires almost zero time investment on your part. The trade-off for that convenience is that you risk becoming a single row on a massive spreadsheet when large firms process thousands of properties simultaneously. Their algorithmic bulk settlements can easily miss the unique, hidden defects of your specific home. This quadrant chart plots the financial impact of your evidence against the effort required. In the low-impact corner is complaining about taxes being too high. But in the top right, procuring written contractor repair estimates provides concrete proof that your home demands a lower valuation. To maximize that evidence, you have the legal right to request the appraisal district's evidence packet before the hearing. Knowing exactly which comparable properties they plan to use allows you to systematically dismantle their core baseline assumptions. A successful protest is one on localized, structural evidence and math. It is never one on emotional arguments about the general cost of living. We can map these options onto a decision tree. If starting from zero, verifying your homestead exemption is the highest return action. For the DIYer, leverage intimate knowledge of your home's hidden flaws to build a specific, evidence-based case. For the time-poor optimizer, hire a vetted local professional, but explicitly require them to use your photos and attend the formal hearing. Here is how those strategies map onto the annual Texas tax cycle. Your window opens on the January 1st valuation date. You must hit the May 15th protest deadline or you forfeit your leverage. Later in the year, attention shifts to August and September. You must watch local tax rate notices and attend the public hearings where the budget is set. Lowering your appraisal value in the spring does not automatically guarantee an identically lower tax bill in the fall. When total taxable values drop across a region, local jurisdictions often float their rates upward to maintain their budgets, utilizing a statutory benchmark known as the No New Revenue Rate. True financial optimization of the Texas property tax system requires abandoning passivity. You have to fight the value in the spring and actively monitor the rate in the fall to protect your investment.